Good morning. Welcome to the B.F. Anderson Technical Report for July 13th. We're going to do it a day early today on this week. We usually report on Thursdays. We're doing it today because the CPI came out this morning. Thought everybody would want to know, I'm sure you're seeing in the news, the inflation number is higher than they were projecting. CPI was up 9.1%. Projection was for 8.8. Anyway, don't rush anything. When the time is right, it'll happen. Just something we need to be aware of. Now, this is a trend strength, speaking of being patient and waiting for the right time. This is 2008 bear market, and we came down and made our low on March the 10th. And you'll notice that with this trend strength, we got one little bitty head fake in here, and then it just continued to drop. Well, we made the low on March the 10th, and then we started to get to around 50% trend strength. Then we broke out to 100, and a new bull market was not far behind. Now, if you look at an example of a company that we would be interested in, you can see here the market made its low on March the 10th. However, Google really didn't break out till mid-April. So, if you were patient and just waited, you could see Google made its low around the time the market did, but then broke out. So you basically had plenty of time. Now, back to interest rates. Fed Waller promises to tackle inflation, says mistakes of the 70s won't be repeated. What he's saying is, back in the 70s, which I was in the business back then, and I remember this well, but inflation started to get out of control. So the Fed would raise interest rates, slow the economy down, and then the minute that employment numbers started to deteriorate, they would start cutting rates again. And then they would see inflation come back actually worse than it was before. So they just kept going back and forth between raising rates and lowering rates. So what this particular situation we're in now is, I just don't think that the Fed's going to pivot. They're going to continue to stay focused. Now, if you remember 82, Volcker came in and really shut everything down with 20% interest rates. So they're saying they're not going to make the same mistake as the 70s. So I think we're going to see higher interest rates. Let's kind of look at things. Continue to be in a downtrend. This is the NASDAQ. Yesterday we broke down below that lower moving average. We continue to be in a downtrend. Mid-cap, same thing. The mid-cap stocks continue to stay in a downtrend. The New York Composite, same picture. We are in a downtrend. Now, if you remember from this graph here with Google, the important thing to remember was for Google to work, the market, which this is the S&P 500 down here, the market was in an uptrend at that time. So an uptrend is very important because it increases your odds dramatically. So as we keep going, small caps, you can see we continue to be in a downtrend there. The market is not in an uptrend, it is in a downtrend. So stock selection right now is going to be very difficult. S&P 500, same thing. We broke down below that lower moving average. And also I have a feeling because of the inflation number this morning, we're going to continue to see trouble. The aggression index, which we're looking for growth stocks here, where we're comparing growth stocks to consumer staples, you can see here recently came down and hit a lower low, rallied back up to that lower moving average, was looking somewhat encouraging, but it's breaking down again, and possibly this morning we may make a lower low. We just don't know. New lows are still too high. Yesterday we had 132. Anything over 40 is troubling. Then we go on to the Ipo Renaissance Fund. Now, this is a fund of growth stocks of companies that went public within the last year or two. And so you can see here starting to base here, starting to flatten out, but yesterday started to break down. We'll have to just see what happens there. Now, on sentiment, we continue to see a lot of pessimism. So in other words, think of it this way. When everybody's pessimistic, it's very hard for the market to get going. But at the same time, a lot of cash sitting on the sidelines, so that creates opportunity. Interest rates are kind of flattening out here at around 3%. Oil prices have been dropping, got down actually below 100 a barrel, bounced back up to about 105. The banks are worried about, defaults. They're worried about going into recession, and we're seeing defaults. So you can see the bank stocks are pretty much in a downtrend. That's important. Trend strength continues to be zero. We're not seeing much improvement there. The S&P 500 trend strength continues to be zero, continues to have a negative connotation. Volatility index kind of settling down. However, it's probably going to pick back up today if we get a downturn. This is the Treasury bonds. Now, this is what's interesting. I'm doing a trend strength on the 7 to 10 year Treasury bond. You can see it made a really dramatic low here, but maybe we're starting to see some improvement in the bond market. That's going to be somewhat critical. Yield curve did invert. We're down as of Monday. We're down to a 0.08, which is one of the lowest readings we've seen, which means that the inversion is definitely happening. Let's look at the top 5. Again, this is just a watch list we want to keep an eye on. Vertex Pharmaceuticals. We're seeing biotech stocks kind of taking a leadership position in the market right now. This is Scorpio Tankers, kind of rolled over. This is a company that has tankers that haul oil. Broke the 50-day moving average, kind of trying to struggle around that 50-day moving average. I would continue to watch this one. Ollie's Bargain Outlet. Ollie's is really benefiting from these inventory liquidations going on at Target and Walmart. They buy other people's stuff they don't want and then cut the price, buy it for pennies on the dollar, and then they turn around and sell it. So the stock's doing remarkably well for retail. This is Alliance Resource Partners. Now, this is a coal company. I read an interesting report the other day about coal reserves. If we are at today's consumption of coal and the amount of reserves we have enough coal to go for 133 years. I just didn't realize that. Here's Daku New Energy. This is polysilicon. This is a company that manufactures polysilicon. Kind of basing out here. It's hopefully not going to break down into here, but I have a feeling it will. Now, just a last quote I wanted to leave you with, because, we're talking to you about technical analysis, and a lot of people don't use technical analysis. In fact, a lot of people don't believe in technical analysis, but I think it's very important. So what Morgan Freeman says here, he says, I'm always trying new things and learning new things. If there isn't anything more you can learn, just go off and die. So the point I'm making here is open your mind up. Technical analysis is a very valuable tool. And if you have any questions, let me know. Thank you very much.